Hello, friends. So obviously, this is a real estate year. I know many of you guys purchased the properties last year, and you're looking forward to taking that bonus depreciation on your tax return. You want to, write off 100, 200, $300,000 of your income using bonus depreciation. So that's wonderful. Today, I'm going to talk about why that might be a bad idea, or why that can possibly fail in, if IRS decides to audit you, some of the fraud out there that I'm seeing in the market related to cost segregation. So let's talk about some of those topics. I think that can help you a lot of trouble. Now, first of all, before I even begin, it is always a great idea to set up consultation with us before you do the cost seg. Now, if you do it after cost seg, sure, we can still identify the problem and tell you, how does that work for your taxes, and if there are other strategies that you can use to reduce your taxes. So for all those purposes, great, no problem there. However, if you come to us before the cost seg is done, then we can make sure that it gets done properly, make sure you actually do need a cost seg, and we can see how else we can have get you a better tax deduction on your tax return. So I'm just saying, if you're going to do all this, if you're buying a property or something like that, then before you go through all that trouble, then do talk to us. And it doesn't matter whether you have a residential property, commercial property, hotel, motel, doesn't matter what kind of property you're buying. If you want to do it cost seg, then reach out to us and let me show you how much difference it can make by having a professional getting involved. All right. So that was a marketing message, but an important message because that's where I see a lot of mistakes and I want to avoid them. So it's kind of like, you go to a doctor, it'd be much better that you go to a doctor before disease develop than going to doctor after the disease develop, because after the disease develop, now you got to pay for medication, you got to go through some extra visits, versus if you go before, maybe just one visit would be more than enough. So trust me, idea here is not to sell you on an extra consultation. Idea behind this is to save you a lot of time, a lot of trouble, and certainly a lot of money. Okay. So problem number one is, do you even need a cost seg? Sometimes, people think they need a cost seg, but not always. Some of you guys might be in high income tax states where cost seg might not really make sense at all. Some of you guys might not actually have an income that can be offset with a cost seg. Doesn't make sense for you. Sometime you don't have a rental income that you can offset from a rental from the cost seg that is coming from a rental property. So that doesn't work. All right. So there are a lot of other reasons as well. By the way, I don't want to list them and bore you here, but the point is, before you go through a cost seg, let's talk and let's figure out, can you actually do a cost seg? Not everybody can do it. So, for example, one of the easiest ones that you probably heard of in the past is active versus passive. So, if your cost seg is coming from, let's just say, a real estate that was, put on a rental, so by default, rentals are passive. That means you can only write off against passive income. So if you don't have passive income, then what are you going to do? So maybe you have a high W-2 income or high business income. Well, it doesn't work. The only way it's going to work is if you can be a real estate professional, or you get involved with short-term rental and materially participate in that property. Real estate professional a little bit different because, most likely material participation rules are already met because you're a real estate professional. So that works as well. And then another issue comes is when a lot of people are getting involved in these syndicates. So sometimes those cost segs are coming from syndicate and they think that they can write off against their W-2 income, but they can't because of the same problems that I talked about. So that's a problem number one that I see. So we can easily solve that by just doing consultation before you get involved in all of this. Now, you can still buy a property and not do cost seg. There's nothing wrong with that. That's just totally fine. Problem number two I see is with land value. So sometimes I will see people walking in with their cost seg study, and the land value makes no sense because of two reasons. Number one is they would have used some sort of a formula, some sort of percentage. So often that percentage looks like 20% land, 80% building. How did you come up with that number? How do you know if the land value is 20%? I mean, go to Bay Area, for example. In California, land can be significantly more than it would be in Texas. But when I look at the tax returns, the person in California is also showing 20%, and person in Texas is also showing 20%. Now, you might say, what's a big deal about that? Well, this is a big deal. So what happens is, let's say you have a $2 million worth of property that you purchase, and land value is $1 million. So that means your improvement is only $1 million. So if you're going to bonus depreciate, then that bonus depreciation amount is based on $1 million, not on $2 million. Similarly, if you're in a different state where land value might be worth 200, so and still $2 million property, now you can bonus depreciate on 1.8 million. Now you might say, if my tax professional probably did it right. I strongly encourage you to pull up your tax return, especially if you own real estate and you did not really do a proper consultation. Take a look at those numbers. Most likely, they are wrong. You might be overstating or understating your depreciation number for years, right? You don't know that because IRS hasn't knocked on your door. But if they do, those numbers can be challenged. And more importantly, IRS will go back and ask you to pay those back taxes because you might have overstated, your depreciation. So keep that in mind. Don't get that wrong. If you get a proper cost seg study done, then those problems won't really exist because you will have the accurate number. So always a good idea to get that done. Now, where do we get it done? I mean, we can certainly help you with it, but there are a lot of other companies, and that's where things actually go wrong. Like, for example, uh, one time I saw a cost seg study. I think gentleman says, "Oh, 100% is improvement because I own condo and I don't own any land. So land is actually owned by HOA, and the property is owned by me. I have exclusive rights to the land, but I don't really own the land." And I think many of you guys who live in condo might be familiar with that terminology. Uh, but that's actually not true. As far as we are concerned, there is an allocation on land. The question here is how much is the property worth? Okay, not the land. Not we're talking about the property itself, not the land itself. So there's always a land value because you cannot build the property if you don't have a land. So I'm surprised to see those kind of mistakes on these cost seg reports that people do. Um, Another issue I see is, where did you get the cost seg done? You know, a lot of time the answer is I got it done online. These people never visited the property. These people have no record of how did they identify different things in your property. They have no idea as to how a property life was classified. They have no idea how old the roof is. They have no idea how old the appliances are. What's the life left on those appliances? I mean, those cost segs are pretty much garbage. They're just estimates, and if IRS were to challenge you to prove those numbers, you would have no record. So that's another reason why the entire cost seg can actually fail. Uh, let's see. Another issue I see is, how is the cost calculated? So let's say you figure out that it's a $1 million property. Out of that 1 million property, maybe 300, $400,000 you're assigning to this bonus depreciation by using cost seg. But exactly how did you come up with a cost, right? Like, how did you give it a value? How did you give it a dollar amount? So yeah, you figured out, okay, 10% of that cost goes to the roof, maybe 5% goes to the walls, 3% goes to this, 5. So you did that. That's how the estimates work. But how did they come up with how much the roof cost? One house roof could be 30,000, another house roof could be 50,000. And when I see these templated cost seg study, the number looks exactly the same. So, the whole idea behind cost seg is you actually have proper calculations. How would a proper calculation look like? So let's assume you building yourself a new home. Well, the proper calculation would be is, hey, how much did you pay for your roof? How much did you pay for your flooring? How much did you pay for your appliances? We can use those numbers, and now we have a proper document to support how we came up with those numbers. Now, what if you have an existing property? Well, if we have an existing property, then we need to use a cost database. And that cost database can tell us, what those numbers look like. Now, some of these cost segs, the automated one that oftentimes people use, and by the way, you know they are automated because they don't really spend a whole lot of money. Sometimes I see people getting them done for like $1,000 or $2,000 or something like that. I mean, nobody going to do all the details that I'm talking to you for 1,000, 2,000 bucks. I mean, you need to spend some decent money if you want to really do it right, because somebody needs to look at every single piece of the puzzle. So let's talk about, you have an existing property. We know what kind of roof you have, but how do we come up with a cost? Well, you cannot just use generic cost. The cost actually has to be localized. How much does that cost in your area? For example, if you're putting on certain manufacturer roof in Fremont, the price will be different for the same roof if you were putting it in North Carolina or in Texas. So it has to be localized. Only then you actually have a documentation. That is what IRS is going to ask you. That, hey, you know, what costing method did you use? Which software did you use? Was it current? Was it localized? Do you have proper paperwork to report it? If you don't, if you say no, I just have this templated cost seg, there's a possibility that that cost seg is going to entirely fail. I mean, it's a good idea to use a company that backs their work, that is properly licensed, that provides proper documentation, and it's going to hold up in case of an IRS audit. So those are some of the things you want to keep an eye out for if you are into real estate. But I'll leave you with this. A lot of time people think that cost seg is the only way to save on taxes, which is not true. It's one of the great strategies to save on taxes, but there's so much more you can do. So oftentimes when people come to cost seg and we're going through that comprehensive review, we find so many other things that these people can utilize to reduce on taxes. So if you're a small business owner, you have a real estate portfolio, or you're just simply starting off with your first property, let's talk. I'm sure I can add a lot of value to you. So if you want to reach out to me, just go to taxcodeadvisors.com and submit an inquiry, and we'll take it from there. Thank you so much, and I'll see you next time.